Nifty at crucial juncture, market analysis and outlook. The Nifty index is at a pivotal moment. What factors are influencing the markets? The markets are currently experiencing a period of stagnation, characterized by disappointing earnings reports, ongoing global trade disputes, and a noticeable absence of leadership among sectors. In this insightful discussion, Kranthi Bathini delves into the prevailing market sentiment, the implications of the India-UK Free Trade Agreement, FTA, and emphasizes why the 25,000 threshold on the Nifty is a critical point to monitor. Market overview. Question. Let's begin with the current state of the markets. Last week showed mixed results with some upward movement, yet the overall mood remained cautious. What transpired? Kranthi Bathini. The markets are still navigating through a phase of consolidation. Each time the Nifty surpasses the 25,000 mark, it faces challenges in maintaining momentum beyond the 25,750 to 25,800 range. There is a lack of robust earnings support or buying enthusiasm at these levels. Conversely, the 25,000 mark serves as a significant support level, both from a technical and psychological standpoint. Today, we fell below this level, which typically leads to new short positions and increased selling pressure. Factors such as the absence of earnings catalysts, uncertainties in global trade, and new European Union regulations regarding Russian oil imports into India have all contributed to this market weakness. Additionally, major stocks like Reliance Industries have faced pressure, having corrected nearly 10% from their peak, which is further dragging down the overall market. What is particularly concerning is the lack of rotation in sectoral leadership. In previous rallies, various sectors would take turns leading the charge, but that dynamic is currently absent. Fortunately, domestic institutional investors, DIIs, have remained resilient. Without their support, the markets could have experienced even steeper declines. Despite the current downturn, history indicates that times of pessimism can present excellent opportunities for long-term investors and those focused on delivery-based trading. India-UK FTA, sectoral implications. Prime Minister Modi and UK Prime Minister Keir Starmer have recently signed a significant India-UK Free Trade Agreement. What are the potential impacts? Kranthi. This is a promising development. Free trade agreements, FTAs, create new market opportunities and demonstrate India's readiness to compete on a global scale. The sectors that stand to benefit the most from this agreement include textiles, leather manufacturing, gems and jewelry, aquaculture and seafood exports, pharmaceuticals and chemicals. We have already observed selective buying in these sectors, with stocks in aquaculture and textiles showing upward movement. For example, Wockhardt, which operates a plant in the UK, saw its stock price soar from 300 rupees to 1,700, illustrating how companies with ties to the UK can capitalize on this FTA. Pharmaceutical sector, India comparative analysis with the US and UK. Question. With the US threatening to impose 200% tariffs on Indian pharmaceutical products, could the UK serve as a balancing export partner? Kranthi. The US continues to be the largest revenue source for Indian pharmaceutical companies, with approximately 70 to 80% of their earnings derived from North America. Any increase in tariffs from the US would have a significant impact on the Indian pharma sector. However, it is unlikely that the US will act impulsively, as these are essential, life-saving medications, and imposing tariffs could lead to increased healthcare costs in the US. While the UK cannot match the US in terms of volume and scale, it may provide alternative opportunities, particularly for companies that have established a presence in the UK or the EU. Global market sentiment, rising uncertainty. How does the global sentiment appear? Considering the ongoing trade-related issues, Kranthi. Currently, uncertainty is on the rise. Although geopolitical tensions have slightly eased, concerns regarding trade are becoming more pronounced. The US-China trade relationship is crucial for global markets, as it affects worldwide growth and supply chains. Global funds that focus on long-term investments are exercising caution and remaining on the sidelines due to the unpredictability surrounding tariffs and trade agreements. While India has the potential to capture a share of global manufacturing, volatility is expected to persist for the time being. Q1 earnings, no major surprises yet. Question: how do you evaluate the ongoing Q1 earnings season? Kranthi: so far, the earnings season has been rather subdued. Infosys delivered a positive surprise, while TCS fell short of expectations. Reliance Industries did not meet forecasts due to pressure from refining margins, influenced by the EU's stance on Russia. The banking sector has shown mixed results. Axis Bank disappointed, whereas ICICI Bank and HDFC Bank reported solid performances. Interestingly, mid-cap and small-cap stocks are showing signs of strength. However, we need more substantial earnings growth to drive market momentum. Key levels to monitor outlook for the upcoming week. Question: what are the critical levels to keep an eye on this week? What is your outlook? Kranthi: the 25,000 mark on the Nifty is absolutely vital. If the Nifty remains above 25,000, we could see a positive breakout towards 25,250. Conversely, if it drops below 24,800, that could trigger new shorting and further declines. Thus, the anticipated range for the upcoming week is between 24,800 and 25,250. If the Nifty can maintain its position above 25,000, we may witness some consolidation or slight upward movement. Otherwise, selling pressure could continue in the short term. Disclaimer: the recommendations, suggestions, views and opinions expressed by experts and brokerages do not necessarily reflect the views of Economic Times.